All right. Today's SPY was down 0.38%. And yesterday I gave the bear and bull scenarios, and I did tell you my preferred scenario is that we would come down here between 497 and 501 and then push higher towards the breakout above 507. And the breakout above 507 will be a bull breakout, which means the sky is the limit. It doesn't guarantee we have to go to brand new all-time highs, but it does allow for it. So above 507, you should be looking for resistance between 509 and 513. And if we break 513, you're looking for 520 and then 525. Now, for any reason we cannot break above 507, you can stay bearish, and below 507, it's still possible we push lower towards 491. 507 is the key level, whether you're bearish or bullish. That is the risk level. Above it, you're getting a lot more bullish. And while we're below it, we are still making lower highs and lower lows. On the NASDAQ 100 triple Qs, we were down 0.48% today. And just like SPY, the preferred scenario is the higher low here into a breakout, and the breakout would likely take us higher towards the retest of the breakdown. And I'm going to get a little conservative here, and I am going to move this down to about 434 because I do believe that is the critical risk level from the breakdown of the range. And that means if we get to 434, it is still possible we get rejected and go lower. But in the short term, while we're above this breakout above 424 to 429, then that does mean we could go all the way to 434, and then above 434 we push back into the 440s. So 434 will be a very critical risk level if we continue to break out higher, and the previous closing high was just above 426. So use 426.5 as the risk level for the breakout, because on a daily closing target that will be a higher high breakout, and that will easily take us to 434. And then once we get to 434, we need to be a lot more cautious to see if we're going to get a rejection and continue lower, or if we're going to get a bull breakout and continue higher. Should be no reason to explain how this could be a bull market. Looking at the weekly chart, it is very obvious that this could still be a higher low within a bull market going to higher highs. On the Dow Jones, we were down 0.92% today. So without a doubt, the Dow Jones, which had the strength leading into the bounce, is now looking the weakest because it didn't even close the daily gap at 383. So in the very short term, do not rule out the possibility we go up there and close that gap. But with the rest of the indices, if they start to break out, we will expect to see the Dow Jones breaking out as well. And that is going to be the break above 385. And then above 385, we'll be looking for 391 and then just below 395 to fill the gap. If for whatever reason we cannot break above 385, that is a bearish indication we're coming back down to support at 377. And if at any point we break support at 377, it's a straight line drop down towards support at 370. On the Russell 2000 IWM ETF, we were down 0.61% today. So we did gap down and fill the gap, came back up to the resistance right around 196, and we still have the rejection from 199. So while we have the rejection from 199, it is possible we are coming back down towards 193 or the 200 daily moving average right around 190. And if at any point we break above the resistance at 190, then we're looking for a bullish push higher to close the gap above 204. So 199 is definitely the critical risk level. Whether you're bearish or bullish, it doesn't matter. Above that, you're looking more bullish, and below it, it's still possible we're going lower towards 190. On the ARKK ETF, we were down 0.66% today, and we still have the possibility of a lower high here. But if we do start to break above the resistance at 44, there's a good chance we push higher towards 45.7, and then above 45.7, we start to break the downtrend and we go higher towards 47. We can't break through the resistance. It's still possible we push down lower for the next leg, which will take us down to 41 and then 40. On the VIX, we were down 3.63% today, so the VIX is still crushing down towards 15. And remember, while we're above 15, it's still going to be a very volatile market with great day trading opportunities. But if at any point the VIX crushes below 15, we are more than likely getting the bullish scenario, and the VIX will continue lower towards 12.8. In a bearish scenario, if we get a rejection from resistance, we're looking for the VIX to spike higher yet again towards 18 to 20. On Bitcoin, we're currently trading just above 64,000, and there's still the possibility of a lower high rejection here. You can see all of the moving averages are negatively sloping, and price action is still struggling to break back above 65,000. So the critical support now is 61,000, and if we break below that, we're looking for a very quick flush to 52,000. In order to get bullish now, we need to break above this high, which is going to require a break above 67,000. So if you want to wait to get bullish on a bullish price action breakout, you're waiting for Bitcoin to break above 67,000, and then we're looking for a push towards 75,000. On Nvidia stock, we were up 3.71% today, and intraday we did bounce off of the support down here in the 780s. And if we continue higher, that's a higher low into a higher high, and that is going to be a very bullish breakout, which should take us higher towards that resistance at 857 and then the top of the range in the 900s. Remember, on Nvidia, I am still expecting a higher high, all-time high between 994 and 1032. I think it's just a matter of time because we do have all the way out towards the end of May before we have earnings, and that is plenty of time for volatility to ping pong around before we see that bull run. But in the longer term, I am expecting to see a brand new all-time in Nvidia stock, which is going to be very bullish for the indices because by far this is still the market leader in the stock market. On Tesla stock, we're up 4.97% today, and we're doing exactly what I drew, which was a capitulation V-shaped recovery, and that's easily going to take us towards 173 into the 180s, and you can see today we did close above 167. So as I told you, when this stock capitulates, it recovers very quickly, and I did say that before the earnings report, and I had no idea if earnings was going to be good or bad, and here we are with the V-shaped recovery. That doesn't prove to you that technical analysis rules the charts. I don't know what will, because there was a lot of people saying that Tesla was going a lot lower, and I told you technically speaking it's not, and here we are technically speaking going higher. So stay bullish while we're above 167, and the next price targets we'll be looking for will be 173 and then 183. On Apple stock, we're up 0.51% today, and Apple did get another bull breakout above 169, and while we're above 169, we're looking for 172 and then 174 and then 177. And I do believe this stock has probably reached a bottom. While I don't know it for sure, this sure does look like a bullish pivot off of that support at 165, and if we don't break below 165, I still think there's a good chance we double bottom off of it. So I'm very bullish on Apple because I am catching the falling knife on a blue chip name, which I have no trouble admitting. This is a blue chip company, and I just don't think it's going into a bear market, and I could be wrong, but it's very low risk to be bullish down here. And while it's low risk to be bullish down here, knowing I could go all the way up to 187, I'm going to take that trade 11 times out of 10. So stay bullish on Apple while we're above 169, and if we break below 169, I'm looking to buy the dip around 167 and 165. So jumping back over to SPY, without a doubt, this is going to remain a volatile market, but we have a lot of data and a lot of earnings, and without a doubt, there's still the possibility that we are still going to higher prices, because if you look at the weekly chart, we are still in a bull market, and this could just be a higher low on the weekly chart before the next higher high. So stay disciplined, manage your risk. I don't care if you're going short or long, just manage your risk around these critical levels, and that way, even if you lose a trade, you are not going to get wiped off the face of the earth with a very large loss, because if you are correctly managing risk, you can lose quite a bit of trades and still be profitable on your big winners. I'm still going to be heavy cash and doing a lot of day trading, even though I am accumulating some swing trades. So if you want access to all of my intraday technical analysis and trade ideas, then you need to be in the Stocks Channel Discord server, and you can find out how to join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.